All right. You know what? Let's just start taking a look around. You never know, right? Never know. Maybe we find some opportunities. Hey guys, how you doing? What's up? So I figured we would just go through the list, maybe start with some uh, top fundamentals, and then if we don't find anything there, and maybe we'll flip over and dig a little deeper into I don't know, like just straight up chart setups, right? So in the screens that I normally run, I'll do something like a NASDAQ 100 and maybe the S&P 100, doing it that way. So this is the IBD stock screener. I really like this because I'm not a fundamentals kind of trader. I don't really dig too deep into, like earnings per share ratios and all of that kind of stuff. So I want something like that done for me. Just give me the package, and give me a number. Is it a good company? Is it a bad company? Is it, doing better, doing worse? So, and on IBD, I can set those screens up to be very, very aggressive or more of a laid back thing. And I mean, I don't need this thing to point out Google. You know what I mean? Like I'm looking at Google. I look at Google every freaking day. Netflix, Google, Amazon. That's not why I would want to use something like this. I use it for names that aren't on my radars, things that wouldn't necessarily come up if they didn't point it out to me. But it does do a really good job of pointing out those fundamentals. And I'm in control of the screen for how aggressive I want to be. Does it have to be like the top rated names, or am I willing to kind of let things slide? And the reason why it's important to me is IBD loves to trade this breakout stuff. It's hard to want to get into a company that is breaking out to all-time highs in some monster rip your face off rally, right? So it kind of took a long time to get to the point where I was willing to even try to trade that way. And it mostly comes down to the strong fundamentals. I would never buy Bob's tree service, right? When it's climbing to new highs, breaking out on the year. But you show me something with a really strong growth, good fundamentals, and then it meets that breakout criteria. Yeah, okay. So what we're going to be looking for, we want to see change on the day and increasing volume, both green. IBD points this out as institutional participation, right? They'll say, hey, not only is it up on the day, it's up on up volume, positive price action. AMD, Google, LX, Tesla, which has already, I mean, that thing's gone too far. I wouldn't even look sideways at it. So we got a couple of really good names to focus on. And then we can also go over to the IBD screener over here and use like their top 20 names, right? Stock lists, IBD Big Cap 20. We have this list as well, right? And we would also sort it by names that are positive and then looking at positive volume change percent. And we got, GNRC, I think is a good place to start. So it has made it through the 111. I like that. Bring it in on the weekly. We had that consolidation package. Bring it in on the daily. We had a conference call today. And apparently that didn't go wrong. So game on, GNRC. Notice that it does not have weekly options. A lot of the names that you're going to see brought up on IBD just do not have those weekly options. Doesn't mean we can't trade it, though. We just got to approach it a little bit differently. We are under the understanding, got to approach it straight from the front. Look at this. No open interest, no volume. Okay, well, we're not using 2023. December of 2022, no open interest, no volume. All right, well, we can't use those, right? And again, we're not done yet. We just got to hunt around, find some liquidity. If we still can't find any, then okay, we walk away. But I'd like to believe, that between one of these months, we're going to start to find, there it is, a little bit of liquidity. Now, I'm not a huge fan of out of the money puts, like out of the money put credit spreads, things like that, mainly because I'm not interested in risking $700 to make $300 and then closing this down at 50% profit, right? I'm just not interested in doing that. It's not worth the risk. Okay, now we're starting to find a little bit of that open interest, right? And I mean, the volume ain't so hot, but at least we're finding some participation. We had to come all the way into January. I know that doesn't seem like very much because it's January. It feels like it's a long ways off, but that's not a long ways off. That's not very long ways off at all. All right, this is a 1-to-1 trade right here. We're risking, basically 485 to make 585. So we got that cooking. Come in and always check, make sure, we're not too far off the beaten path. That's as much as I'm going to adjust it. So that's GNRC, January 2021, 495 strike. Try to get it filled near or less than $5. It's not filled yet, so we're not going to put into the trade histories until it gets filled. Right now, it's just a working order. Not interested in playing around with Tesla. I'm already holding Microsoft. I don't have any AMD. We can come in and reevaluate AMD. It's something I day trade all the time, so it's not like I'm, kind of surprised by AMD in any way. But whatever, we'll come take a look at it. Validate our fib levels from the red candle, high to low. We're on a very high time frame. There's our weekly. There's our daily. You can see the cup. We barely kind of have a tiny little handle. 1026 is the earnings. We didn't crash and burn afterwards, but we really didn't get anywhere either, right? Kind of step that into a 2-hour. You can see that nice clean run up and a lot of the consolidation. Again, it didn't really do anything. That's not a bad thing, a good thing. Chip sectors were on the table today, right? They were on the table this morning when we were doing the analysis. And one interesting little tidbit, when I was with a coaching client and we were reviewing Tasty Trades or Tastyworks crypto futures, right? Because you can trade micro crypto futures. Well, you can see what the product is made out of. And when we went and looked it up, AMD and Taiwan Semiconductors and a couple other chip names are what make up that futures smalls exchange product. Pretty interesting, I guess. Maybe I'm just a nerd. So anyways, AMD survived, right? It didn't crash and burn. It's a little bit weak, yes. We're going to let it play out a little bit. Not interested in doing anything with it today, mainly because it didn't do anything, right? A lot of violence, a lot of volatility, and then someone just let the air out of this thing. So yeah, you could. And if you want one, I mean, I'll build it for you if you want one in here, but this didn't do anything, right? So I really don't want to trade of that. XLNX. Now, of course, we got to really ask, is that appropriate to put my fib there? We don't know. Let's back it up and actually tag it. All right. So when we started here, got a red candle. The next time we moved up, hit that 1, 2, 3, 6. That gives us the validity to move it. We're almost to a 1, 2, 3, 6. We'd be ready for a pullback. I don't know how interested I am in trying to run that thing, knowing that it is due for a pullback. It's also got earnings. Yeah. Nope. We're going to let that thing report earnings tonight, and then we'll deal with it. Look at that consolidation. Boy, let's go look at our earnings trade. Who knows, right? We found one on Amazon. Maybe we'll find one here. Market maker move, $5.50. We have an expected move on the right side of 816. 8 and 5 is 1350, 60, 70. Man, that's not bad, right? It's around $14. Why haggle, right? Call it 8 and 6. $14 expected move higher, $14 expected move lower. We're sitting at, we'll just round up and say 185 on this side. Add $15 to 185, that puts us out to $200. What would it cost to build a butterfly at $200? I'm curious. $13. I mean, if you're wrong and it crashes, you're going to lose $13 and your commissions. Want to lose, you know what I mean? But it's $13. If I can get that for 10, I'm going to take it. So I'm going to just set that order to 10. And if I can get it, I'm going to take it. Now let's go the other way and look at 180 minus $15 would put us at 165. We really should be using the 182.5, but for easy math, right? We're trying to move fast. If we want to take $15 off of 182.5, then your brain starts running, right? Like, wait, hold on, the hamster's going to fall off the wheel. But if you just say 180 minus $15, that's 165, bring it up a strike. There you go. Just like that, right? We didn't have to do any real math. Buy a butterfly. $18 in credit. Notice it's green and it's a minus 18 credit. What is that all about? Well, it's because some of these options are so out of whack that it's not pricing the trade correctly. You can't have this trade. You wouldn't want it, right? And just let it go. But we can try to price a little bit higher. There's a real one, $18, which means if we went back to the first one and you were to try to fill that for $5, it might actually fill. That would give you a butterfly on each side. The interesting thing about having a butterfly on each side is that you can rip the butterfly apart and turn it into an iron condor after it reports. You can only do that on Thinkorswim. I've never been able to get it done on Robinhood or TradingView. I've never been able to do it anywhere else, but I have done it here before in SPY. So you can rip two butterflies apart and convert them into an iron condor. It's pretty cool. I don't really want the put side. However, I really want the upside, especially with all this juice. You may as well just go where the market's going, right? Let's see what the news says. Yeah, no, I don't know. We're gonna revisit. I don't want that one, by the way. We're gonna revisit the butterfly, see if we are off in our values. $18. That thing is going up more and more while we're talking about it. Fine. Pay $18 for the darn thing. You know, if we're completely wrong, we're going to lose. It's not going to make any money. And we're just going to be, that's it. All right. Well, how far does it have to move before it actually starts to make money? Good question. So here is that trade. And once you have the trade built, you can set your break evens and then set those lines on the chart. We would need this thing to get up to those pink lines. Seems a little too far, doesn't it? From its current location, a move to the middle of that thing would be an 8% move. It moved 7% today. Doesn't seem like that much. Has an average daily range of 2.5%. All right, so the white lines are the expected move for its earnings. That's the straddle that is pricing up here. High and low. Right now it's pricing it at $108, but it's missing the market maker move, right? Which is going up by the minute, apparently. We keep missing our trade. I don't want to pay $20 for that thing. I'm not gonna pay $20 for that thing. I'll pay 15. That's the most. So if we don't get paid, we don't get in at 15, I don't want it. Forget it. Okay, well, we got 70 minutes. Power hours coming in, bonds and the dollar are going to be closing soon. That ought to free us up for a little bit of a play. Maybe we catch a 0-day while we're at it. Just let it unfold. Let's go back to hunting. Hey, you guys can ask questions too, by the way. I mean, I don't want to just be sitting here talking to myself. Real math, man. You know, real math. Órale, where are we chatting? I'd say use the system chat, right? That way we don't bog down the regular chat. You know, not everybody can see what we're watching because it's only for yearly members. And they might not even understand, like, what's he talking about? I don't see nothing. Real math. when I kind of got in a habit when I was day trading in options that I wanted to be able to move very fast in the options chain. I didn't want to be stuck sitting there, like trying to calculate. So you come into like short little quick handy ways of doing things, like jumping the strikes. All right, let's get back to trying to find a trade here. ASML. It is negative on the volume, but it is up. It's not what we're looking for. Tesla, Google, XLNX. Those are all from the NASDAQ 100. Let's try the S&P 100. Shoot, Tesla and Google. All right, let's try weekly options itself without any of the index connected to it. We are on the aggressive screen. Google, AMD, XLNX, Tesla, D-Dog. There's one we haven't seen yet. 7 quarters of increasing fund ownership, 4.0% in change in funds owning this thing. Up volume. This thing is like in go mode, right? D-Dog. Let's check out D-Dog. It has weekly options. That's a start. GNRC. I was trying to get filled at 490. It's at 495 now, and I still can't get in. Let me unlock and reload. See if I get it that time. Let me in. Let me in. It's not overly liquid. It kind of hits the edges of what I would tolerate for a trade, but I would tolerate it. I would trade it, recognizing its lack of liquidity, right? The way I teach options with newer traders, I tell them just stay the hell away from something that doesn't have weekly options because they're so new. They need that level, that line in the sand that says you shouldn't be trading this crap. Because if it goes wrong, what are you going to do about it? You're not going to know. You may get stuck. It could get hurt. But these are trades that I'm going to be in it with you guys. So if it doesn't work, we'll figure it out. We'll, rotate it, roll it, flip it, do something with it. I don't like trading things that don't at least have weekly options, but it doesn't mean we can't. We just got to recognize the risks. All right, so D-Dog has earnings, but not yet, right? It's not yet coming. They're coming soon. How soon? Yeah, November 4. We're inside the earnings box, right? Top side, bottom side. I don't really want to put on like a regular trade because I know we got an earnings to look at on D-Dog. So it's either the idea that we trade earnings or we take a day trade and we call it good, but we wouldn't want to like take a swing trade in this because of earnings. So what else we got? ON, semiconductors. Very high rank, very high ratings. ON. Yep. Nope. Earnings. Shoot. Earnings take all the fun out of everything. All right. Let's hit the FANG names. Facebook already did earnings. It's really weak right now. I would like to find a reversal spot and then trade this weakness. I'm already in it. I've been in it. So nothing there. Google made a monster move today. Again, it's really hard to want to trade something that's made such an exaggerated move already, right? IBD is the one that kind of got me into even being willing to look at something that's moved so far. Let's see what we could find over here. January 2023. So why so far out? Well, we can run a bait and switch, right? If I'm running options that are very close to expiration, the smallest moves up and down are going to hurt. If it starts to go against us, it's going to go against us really fast. And you're going to take 60, 70, 80% loss. But if you get the trade and you're out 200 and some days, if nothing is going your way and this thing starts to lag and it's just not doing anything, sure, your trade is down a little, but it's not down demonstrously, right? It's not crippling in its pain, and it has plenty of time to turn around. Plus, going that far out, you can go this far out of the money where you literally have a trade that is, $220 a risk. Hey, I don't like the idea of losing $220, but this trade has 200 days in it, right? You're not going to lose $200 in the blink of an eye. It would take months for this to go to zero, and we wouldn't ride it to zero, right? We'd be looking for a way to manage it, get out of it, do something with it. Obviously, if we could go a little wider, that would be better. The wider the spread, the more exposure to the Greeks that you have. And options this far out respond more to the Greeks and to bid-ask liquidity than it does to price action. I think someone pinged me somewhere. That wasn't me. All right. Will this work, or could we find something better? Let's try one closer in. March 18 has way better pricing models, and we're closer to that blue line. So the blue lines that you're seeing here, the thin dotted blue line is a 1 standard deviation within the options chain, and the wider dotted line is a 2 standard deviation move. I'd really like to get closer to the blue line. That does bring the risk back up a little bit. Maybe kind of try to be right outside the line, somewhere right in there. If I can widen this thing out a little bit. 200 points in Google for $245. All right, sure, why not? So right now that trade is pricing at 250. I'm not really interested in bumping my order up yet. This is not a field trade. Well, there it is. Now it's filled. So that one's done. We'll go ahead and add that to the other channel, right? That filled so easy. If one of you aren't filled yet, try to knock your order down to 240 instead of 245. See if you can get it a little bit cheaper, right? So what's our goal with this, since we are way out of the money, right, in Google? I mean, we are like out there. We could be sitting on satellites. We're so freaking far out there. Well, today alone, it moved $156. It's very likely going to pull back at this point. So why did we get in it? Well, if you look at the same thing with Tesla, and you look at all these other FANG names that are going bonkers right now, they're going bonkers right now. Everybody who's standing aside saying, oh man, I shoulda, woulda, coulda, too late now, it's already gone too far, and you're still watching it travel and travel and travel, and you're still not in it, right? Why? Well, because it would cost so much money to get in it. Nobody wants to eat that risk. Well, we got a trade here. It's very small. It doesn't have a lot of risk. It also has a lot of time, 142 days. And we could get stuck in this, and then we got to roll it, or maybe we got to do something with it. I mean, those things can happen, but there's a plan, right? So if we get in it today and tomorrow it starts dropping, we're going to start rolling this thing around, avoiding PDT. We would roll a call one day and maybe roll another one the other day. We're going to get slapped around a little, but the worst that is on the line, 245. You can't lose more than 245. I don't want to lose 245 either, right? I mean, I will go to some lengths to not lose my 245. But worst comes to worst, that's all you're going to lose. And it's not going to happen in a day. That thing's got plenty of time to move around. Earlier in the month, we had this discussion where I said we were sitting at the October surprise. We were sitting right back at, yeah, show me up, huh? 239. Nice. Very nice. That's all right. We were sitting up at these very high levels. And I said, it reminds me of October 2018, and that there was two ways that this was going to go to Christmas. Either that we were going to repeat October, November, and December of 2018, or that we were going to repeat more of a 2020 Christmas. But that we were now in the fourth quarter, and it was going to be one or the other. And I really didn't know which way it was going to go. But I did remind everybody that Goldman Sachs price target on the year for SPY, $500. That's been their target since like June. Not even June, man, like March, February. Goldman Sachs has had that target all year. So this can go one of two ways. We're having blowout earnings. We're seeing all the FANG names run. Everything's going wow and popping. It is very, very likely that we're going to have that kind of year right into from October to Christmas, right? All the way into the new year. Fourth quarter run with positive earnings. As opposed to 2018, October to Christmas, where everything kind of went bad, right? Actually, that was the wrong year. That's 2017. This is 2018. I recognize that volatility box anywhere. It's right there. That was my first Christmas trading and getting kicked in the face. That was a lot of fun. Not. Right. So one of two ways that this was going to go. And I think it's giving us its answer. I really do. We'll know very shortly, but if that's the play, let's run it. Right. That's what these trades are for. See a blowout Amazon, a blowout Google, a blowout Tesla, FANG names. The only name on that list in the red is Facebook. Every one of them has momentum and trend except Facebook. Not just momentum or just trend, momentum and trend in every single name. Now, in the grand scheme of things, everything can still fail, crash, and burn. That's true. We're not promised anything, right? So don't go out there trying to sacrifice half your account thinking that you're going to double everything in 6 weeks. It's, don't don't do that. But it's very likely that we're going to have one hell of a fourth quarter, and we want to capitalize on it. All right, so we've gone through the names that have price up, volume up today, but that's not the only thing that we can trade, right? And it doesn't mean that they're the only ones worth trading. All of these names have very, very strong fundamentals. That's why they're on the list. We just focused on the ones that were up today with positive values today first. That was the first ones we wanted to look at. But how about net Cloudfire? We're getting a little bit of a pullback on that thing now anyways. 7 quarters of increasing fund ownership, and it's changed 5% from the last quarter on how many institutions hold it, right? So NET, net. A little bit of Busby, right? A little bit of Busby. My own scribbles are throwing me off. Get rid of that stuff. All right. Man, it's hard to even stomach trying to think about a trade like that, right? It's already gone so far. It already seems like it's made such exaggerated moves. And we are a little close to earnings there. So, all right, so we're going to let that one pass anyways. APO. Busby. Earnings. Dang, this is starting to become a theme. I think had hoped at this point we would be on a lot of these earnings already. Inuit Software has earnings November 18, more than enough room for us to get a little bit out of that. $60 wide iron debit or $60 wide vertical OTM for $1. 86 days out. It's got an expected move of $70 from 600. That would put us at around 670. So we're outside the expected move quite a little bit. The idea behind this, though, is that we wouldn't be hanging on to it for the whole trip, right? We want to flip through it. We definitely want to get out of it by the 18th. Man, that liquidity is light in January. See what else we got. Definitely no December. I mean, that's putting us right into November. That ain't gonna cut it. All right. Okay, June isn't looking that bad. May get a little something in June. No, not really. Ah, dang. Come on, man. Give me something. No. Uh, no, heck no. All right. Nothing really good in there liquidity wise. Where I would want to go, there's not enough liquidity. The 720 is about as clean as you can get. It's $2 for 1800, and you're pretty close to the expected move. If you're not used to the broker that I'm using right here, this orange box, that's the expected move. It's a nice little subtle visual of where you're building your line. All right, so just at a glance, I can look and say, oh yeah, there's the expected move. and I'm building it beyond that. But I do have this blue line right there, and that is showing me that I'm building it one standard deviation away from price. Right. So just a nice, subtle little way of being able to identify how far away I am in my trade. We're not out of line, right? That's basically what we want to recognize. If we step on the other side of the line, it brings the trade down to $1. I'm a little more comfortable with that, mainly just because you start stacking on too many longs, and you're holding a lot of risk. The only reason I'm willing to stack on so many longs is I'm carrying a hedge. It's something that you really want to consider, right? Because if SPY crashes, all these longs are going to lose. So if you're not carrying a hedge and the market crashes, all your long trades lose. You just take a really big loss in your account because they're all going to lose, right? That sucks. So carry a hedge. Hedges are cheap. They don't even have to be complicated. You could just literally buy a put in SPY, or you could buy a call in the VIX. That is really generic, but it'd work, right? Here is SPY right now, and you can see we came back down and tagged the low of the day, and we're breaking the low of the day, going to new lows on the day. Power hour is alive today. What made it power hour? The move in the dollar after the dollar closed, or I should say as we ran up into the close on the dollar. Or maybe it was that fade in the bonds, or a little bit of both. That would have been an awesome 0 day off the top of that SPX though. If we were watching for 0 days, that would have been the one to do. All right, so we got Inuit software. It's not filled yet. It's just built, sitting in the books. We're looking at $1.05 in risk. It's $20 wide and 86 days out. Now, you guys notice how we're not spending an inordinate amount of time analyzing the stock chart. I don't know if that subtle little distinction has started to slip through yet, but notice how we're not doing that. Well, it's being recorded this time. So that's a start, right? At least I did get the damn thing recorded. I'm blaming Zoom, by the way, stupid Zoom. We filled an XLNX. That butterfly got filled. So yay for us, right? What would I consider a 0 day? Well, first it would be options that expire today. And then I would be using the SPX. And then we would have focused on the fact that when it got back up to its intraday high, it took a rejection there. This would have been a perfect spot to run a call credit spread that expired today. Make it 50 points wide, collect $25 in credit, close it down 40 minutes later, and yay for us, we just made $1,300 to $1,800. Boom, boom, boom. Yep. That would have been a good one. Wait, say that again? I know, right? Everybody loves it. Wait, what? Okay, so credit spreads that expire today means no matter how much credit you get, when the trade is done today, that's the money you make. Well, it's the SPX, so we can go big. If you make this thing 50 points wide and you collect $25 in credit, or $39 in credit like this one, well, that's $3,900 if you run it into the close. But we wouldn't have needed to run it into the close. We would only need to have run it for like 40 minutes and close it down for 50, 60, 70% profit. I mean, we can day trade where we get $30 here and $50 there and we can do that. Or we could just, do 2 or 3 of these in a month and say, screw it to all the other BS. They're worth waiting for, right? If we were sitting here with nothing else on the books every single Monday, Wednesday, and Friday looking for a 0 day, and if you run those where you get 2 or 3 in a month, you're done, right? That's it. Something got filled. GNRC. Just a second, I gotta. Sorry, I had to talk to my watch. Crazy Apple Watch. All right. I haven't really had good luck hitting a butterfly. I've hit iron condors. So most of the butterflies that I did good with last year, they weren't way out of the money crazy butterflies. They were very consistent expected move butterflies on the SPX. Those have a much greater chance of success. Or an earnings butterfly that I've built right on the line, I've had those do really good, but that's not even what we did in Amazon, right? In Amazon, we took the expected move and then we added an extra 50%. I have never had one of those hit. Yep, I got me and the wife both Apple Watches, so we're trying to get used to them, setting up, all the alerts on Thinkorswim so that you can just tell this thing, give yourself an alert right there, and it will pop up on your Apple Watch using your own words, breakout on Busby or whatever. I know, she's a beast, man. Study, study, study. She puts all of us to shame. These 0 days can be the only thing you could trade if you wanted to trade them. They make enough money that you could just give up on trading, the other junk and trade a couple of these in a month. That's all you would need to do, because they literally make a ton. But trust me when I tell you, you see how big that trade was that I built. I will not make a $50 wide credit spread on a whim. I won't do it. When I make them this big, it's because it fits my playbook and everything is right. When everything ain't right, I make it a lot smaller or I don't trade it at all. And every once in a while, I'll go out of the money and, I'll just do like one of those. But when you can get one of these, right, and you're risking like 1,500 to make 3,500, yeah, that's worth it. The thing is, you may only get like 3 in a month, even though you get 3 opportunities a week to run a 0 day. You may only get 3 good ones in a month, but you're talking about hitting $2,500, $3,000 in 45 minutes to an hour. It's good times, man. Good times. All right, so let's see what else we got on that list. APO. Did we get to APO? I've been there. So what I don't have in these columns is sector. Doesn't mean that I couldn't like bring up sector, right? Maybe. Industry, nah, industry group rank. So if you see a name on the list that fits the sector, we can go BXTN, biotech, bionic tech. What is that? Yeah, bionotech, BNTX. Come on, Thinkorswim. I might have to reboot this thing. We're gonna give it a second, let it reboot. Otherwise, we won't get anywhere. One of the things that I do is if it starts, see how it's still not done? When I go to turn it off and it's taking this long to close, I know it's gonna work better when I come back. But if I try to shut it down and it immediately shuts down, I know that I didn't accomplish anything. And then when I turn it back on, it's going to be acting in the same way. So this is a really hopeful sign, because when it does finally eventually close, when I get it loaded back up, it's going to be doing good. It's going to be doing so much better. We got filled in Inuit software, by the way. So that's a done deal. Go ahead and get a picture of that. Hey, we're already up $2 whole. That's commissions, man. Well, on one of the contracts, we've got half the commissions paid. Yay. We also filled, well, Thinkorswim's shutting down, so I'll have to wait on that one. But I filled a Thinkorswim one also. So we'll get the picture in that one done too. Let's revisit. Did we get that, Google? Yes, we did fill for Google. That one must have snuck by me. Hey, that is the Google in there. I already got it. I don't like the picture that's in there. It doesn't have the word Google on it. So we'll just replace it with that one. That looks better anyways. All right, look at that. Thinkorswim still isn't done. So when that thing finally does get reloaded, it ought to be running so much better. BNTX, we'll just analyze it over here. Bio in tech. Oh man, come on. What, you're gonna act up to now? It's a conspiracy. BNTX, we're underneath the 20, we're underneath the 10 on the weekly. Got one heck of a pullback, no squeeze, and it's lost a lot of its market balance. But see what we can do with this thing. I like that it found some support on this structure back here, and it's back above the 10 and the 20 on the daily. We had a little bit of a squeeze, and then it stopped squeezing. Thinkorswim finally closed. Let's look at these options here. Okay, we got an earnings November 9. Not necessarily a bad thing, just it's so short, it'd be very unlikely that we'd be able to get out of it before its earnings. So we would definitely be aiming for earnings or for options past that earnings. I'm not really comfortable with it though. So what else we got in that thing? I think there could be a faster way to go with this. Perfect. These are the names that are on that list. I exported them. If you want them, right there in that list. But if we bring them over and we make a watch list, we can then add sector to it, and we'll be able to see which one of those names are sectors. It said no, nothing found. Shoot, what the heck? I didn't know stick to my clipboard. It's IBD screener for fundamentals. I can certainly bring up the screener and you can see it. All right, so this is my more aggressive screener. First, we're looking at things that have weekly options. It has to have weeklies or it won't hit the list. And then second of all, top composite rating needs to be between, well, higher than an 85. Relative strength rating needs to be higher than an 85. And the spoon rating needs to be higher than a B, or at least a B, right? Higher than a, yeah, at least a B. If you're new to IBD and not quite sure what those rankings mean, wasn't fast enough. The composite rating puts all of their stuff into one number. Okay, I know you do because you've got IBD trial at least, but a lot of people here may not know, right? So I'm running a composite strength that's pretty high. It's got to have at least a 90 to be on my list. And what I usually do is if I look in the list and there's nothing with when I make it really aggressive, then I'll dial it back. So here's my aggressive screen. And then here's my more just like a well-rounded screen. Now I kind of, I back things off a little bit, right? So we were looking for biotech names, and really BNTX is the only bio name on there. Um, I'm sure the other lists had it in some way, shape, or form, but I like to set it at aggressive. And the main reason why is when I run my screens, I don't want a really big list of names. I know that might seem like the wrong way to go, right? But to me, the best screen has nothing, right? And then like one name pops up and it's, yay, we got a name, rather than the other way around where you run a screen and you've got 200 freaking names to crawl through and trying to figure out, if any of them are any good. So I like my screens to be empty or very close to empty. And that way, when something does pop up, I find value in it. But running more than one screen helps, right? So we got an aggressive screen and then a not so aggressive screen. And we were looking for biotech names, which is why I exported everything and stuck it into Thinkorswim just to sort them by their sector and, see if we could, anything pops up. So in mode has a rank of 4. Looking for a rank here. I don't remember there being rank in that. Normally, when we look at something like this, it has an explanation of what we're looking at. Rank isn't in there. I guess if we're sorting these, no, because that wouldn't work either, because there's 23 names and there's rank of 49. I guess we're just going to assume that IMDb is the good name. Good rank of 4 is good. Yeah. Okay. Increasing fund ownership 8 quarters in a row. That's 2 years. Change in funds owning this stock has increased by 14% from the last quarter to this quarter. When we talk about aggressive accumulation by institutions, that's what it looks like. INMD. And yet it does not have weekly options. Dirty dogs. It always makes me nervous. Don't feel that, guys. It always makes me nervous when it fills that fast. Knock your value back. See if you can get it cheaper than I just got it. I got in at 159. See if you can get filled for at least 155. If not, say 150, right? Yeah. I mean, you can grab a different one. 450 days out, INMD 95 100. We're more than likely going to run like a bait and switch on that thing. All right, Accenture's been running in this channel. We're going to have this one on watch. It's got a high implied volatility. Earnings is a little bit away. This will be good to buy a call and sell calls on, but it's going to be pricey to do that. ACN is not cheap, right? We're going to be looking at around January 2023. You're looking at around 3K. Ish. The reason we would think about doing that, we're going to be aiming for at the money, maybe even slightly in the money. Right? I mean, we can go out of the money a little bit. We don't want to be way out of the money. We don't want to do that. And it's because we want to sell options against this thing, right? First, we want to trade the breakout. If it doesn't break out, then we want the ability to trade options against it. If you go way out of the money and you buy, this $850 option, you're going to be stuck trying to sell options up here for $12, $15, $20, $30. You've got $800 to cover. You're not going to cover it $20 at a time. You're going to be working on it forever. You sell one of these or you buy one of these at the money, put some real cash on the line. Then we flip around and we start selling calls against it every time it stalls. Selling calls at the money, even in the money. And we sell them the next day or buy them back the next day, right? Sell them, buy them, sell them, buy them, sell them, buy it. You can rack up hundreds of dollars really fast doing that and quickly pay off that $4,000 that you're holding on the back end. ACN has a $2.81 expected move from the market makers, meaning it still has some juice. These have high implied volatility. They're a little more pricey than normal. It's got a $10 expected move between now and November 9. But when we start going out to January 2023, you got a $100 expected move. See if we can get filled at around 41.3. Oh, immediately got filled. All right, try to get it a little cheaper than that. I got filled really, really fast. I don't like it when I get filled really fast. All right, so that was 41.30. See if you can get it for like 41. Save yourself an extra $30. All right, now I'm long. ACN. That's the trade. We'll put it in the trade history. Now, I'm not going to just immediately run out and sell a call on that, right? That's not the idea. If we do that, then we're going to like shoot ourselves in the foot. We don't want to immediately sell a call. Although you're going to feel like you want to because there's so much money there, right? Just breathe, give it a little bit. If this rejects and fails to break through here, we're going to start selling calls against it, right? We'll be selling calls at like 360, things like that. And look at what we can get for selling the 360. I mean, even right now, right? We could run a 0 day on the 360. Now that, 2 days out, $50. I mean, that's nothing. It's not even worth doing, right? But when we can go, now that we've got the 350, we can sell anything from 350 on up, which means we can sell these in the money. Now, where's the value? Where's the greatest amount of extrinsic value? It's at the money. We can see it. I'll zoom in so you can see it. Turn my counter on. Turn that darn thing off. Extrinsic value, where we go from purple to black. Purple's in the money, black is out of the money. Look at where the greatest amount of extrinsic value is. So if we buy that thing for $1.67, $1.64 of that is all-time value. Between now and the next 2 days, if we don't get a major run and nothing really extreme happens, this option is just going to decay another dollar something. If we were looking for just a short little play, even on an intraday, in and out a couple of times, selling something like this and getting right back into it, in and out, you can make 100 here, 100 there, and it doesn't even matter if price moves. A lot of times when I have nothing else to do, I go in and I look at my list of naked calls and what I can sell options on, and I just sell some options on it. I mean, why not? Get in, get out, get in and out, get a couple $100. It doesn't even matter the price moves. And if price does start to move and it does start to challenge me, then I just roll the call out. It's mine. I'll roll it out if I want to. So I take it and I flip it out another week, even if I have to go out of the money and then take more credit in the roll, right? So we are long ACN. One of the reasons that we got into it is the channel. We're right at the top of the channel. We are taking a little bit of a risk because it has not broke the channel yet, right? So we have a little bit of risk because we got in before the breakout. However, our risk is managed because we bought it in the money and we can sell any option we want from that strike higher up. Yeah, Raj, that's, we talk about small accounts here all the time. And it's mainly because my roots came from a small account. I learned to trade in small accounts. But I really feel we gotta be fair. And I don't think we do enough for the big accounts here. I really don't. A lot of the coaching consults that I do are people with big accounts. They have their retirement account, they have their portfolios, they're retiring and they got all this money and they say, I don't know what to do with it. And you guys are taking like 50-cent wide credit spreads, and they're not putting that money to work. And yet when I was only trading options and I wasn't trading futures, I lived on my options trades. I paid my bills. I quit my job and came home as a trader making money with an account that was less than $20,000. And I still made enough money month to month for me and my wife to quit our jobs. Neither one of us work anymore. I trade for a living. So if I could do it with small accounts, I know people with big accounts can do it, and I'm not seeing big accounts do it. I'm seeing big accounts screwing around with 50-cent wide trades. And I get it. We have to learn how to do it, and we want to learn small. But those big accounts need to put that money to work. It just breaks my heart to see someone with $100,000 who can't make $1,000 in a week. I was like, why are you not making at least $1,000? You've got the weight to really make money. And I'm not seeing it. I'm seeing people scratch, for $15, $20, busting their bum, you know. Yeah. I mean, there's a long way. There's a lot of ways that you can do it, and you can do the trade. It doesn't have to be in a big name like that. I was doing these in AMC before AMC blew up, right? When it was back here, I was selling puts in this, you know, selling puts, getting the credit. And if everything went wrong and I was going to end up with stock, I would have ended up, in fact, I think I did get stock once or twice, but it was cheap enough that my small account could handle it. Now, I mean, no, I wouldn't sell options on AMC now, but look at InBev or SOS or one of those crypto names. You go in and run a put on this. The heck? Okay, nah, not on InBev, apparently. No. Not a massive amount of money here, but you sell a put on that buying power $176. That's a naked put. You know what I mean? Like I don't want to, own SOS, but I certainly could run a wheel strategy on this. I did that on GNUS and ended up with stock. And I've been selling calls against the stock that I now own for a while. And it doesn't make massive amounts of money, but I don't have massive amounts of money tied into it. You know what I mean? It's a trade that I ended up taking stock in that I really didn't want stock in, and I still didn't get hurt from it. I actually had more shares than that, but I sold some of them for $2, which is what I had paid for them, because I sold calls and actually lost them to the call sell. But that's fine. That was kind of the goal. And then I've still got these other ones, and I'm just hanging on to them. You can see I'm down, I don't know, $31. Shoot. All right, 10 minutes. I'm going to have to get off of here in a few minutes because I've got an appointment to go to. But we managed to get a couple trades on. That was the goal, right? We didn't spend a lot of time on the technical analysis because we didn't need to. These things are going to work or they're not. And there's no reason to, like crunch the charts and cry about it. Don't get me wrong. I like high momentum. I like the plays. I will trade them. I will hunt for them. But it wasn't necessarily about that today, right? It was the idea of, hey, let's go crawl through the IBD list and let's see what we can find on here that has really high fundamentals that either already had their earnings or, are far enough away that we can run those. And, let's start putting some trades on. But please, guys, be careful if you're not holding a hedge. All of these could lose. The entire market can take a poop, fall out of bed. Every one of these would lose. Don't leave yourself exposed that way. Carry a hedge. Otherwise, we're going to look to manage these as time goes by. They have time in them. Don't freak out if they start to go against you. We're going to flip them over and do what we're going to manage them. Whatever we got to do, we got the time to do them. I do appreciate y'all coming in. ask questions, share pictures. That's literally what we're here for. And when I get a chance to come in and put on trades or to hunt for trades, I'll give the shout out like I did today, and we'll come in and get her done.